Let's switch back to local issues. Number one, obviously, housing around here. We have seen a stability returning to the housing market. Do you see that stability continuing, Kathy?
Yes, I do. We've seen inventories falling, which I think is actually a positive sign. I think it means that people who are thinking about selling their houses are actually deciding maybe it's worth waiting a few months. That house price, if they sell now, they'll get less than if they wait 4 to 6 months. So I think that there's a sign that people are expecting prices to go up. Inventories are going down. And so prices are moderating and stabilizing. This is a very long housing slump that we've had. The forecasts from places like NEEP are saying 11 to 12 years for the slump. To put it in perspective, the slump after the Great Depression was 20 years. So this was bad, but it seems like it's coming back. Things are becoming more stable. And certainly in Massachusetts, people who had been unable to buy houses when everything was so expensive and we were bemoaning the horrible high price of housing are now saying, oh, I can probably get in. Interest rates are record lows. If you can qualify for a mortgage, you can get a great 30-year fixed for 3-ish. And so I think the market is going to come back on the residential. Commercial, there's been certainly building. But we've seen vacancy rates in the Boston area falling, and so I think that it is coming back. It'll be slow, but it's coming back, and I think it'll continue.
Kathy, let me ask you. You know, the recession has left some industrial areas of Massachusetts lagging behind the Boston area. Mm-hmm. Is there anything the state can do to help those areas of the state that are lagging way behind?
The Boston Fed did a conference on this. I think it was in 2011, looking at places like Worcester, Springfield, the older industrial cities, and how they can come back. And some of the things that make those kinds of cities unique is their population tends to be younger than places like Boston, which surprised me. I think of Boston as a very youthful city, but they tend to be more diverse ethnically. And so trying to think of the kinds of jobs, the kinds of industries that might be helpful to come into those areas and help drive growth are things like medical services. The great thing about hospitals is they provide jobs at a variety of levels. So you have people who with high school educations all the way up to medical doctors and everything in between. And so those are the kinds of industries that will speak to this kind of diverse population. The fact that the population is younger also means they may be more amenable to training. And so any kind of effort with community colleges to try to increase relevant training for people will help bring those areas back. But Worcester's a great place to live. There's nice housing stock. There's great infrastructure. There's lots of colleges. So these are places where people would like to live if there can be employment. And so I think there are things that can be done to sort of, you'd hate to pick and choose industries, but
Sure.
Certainly you can think about what kinds of industries are there, what do they need to grow, what kind of partnerships can we have with the local colleges to help provide the kind of training and support that would need to go on.
Kathy, let me ask you, as an economist working in higher education is facing a crisis of its own.
Yep.
With mushrooming tuition costs yep. and student debt. Give me a snapshot of that. Is there a way that the higher education industry can react to this and lessen this impact?
I think higher education as an industry is doing what a lot of other industries, finance, manufacturing, have had to do over this period of time, which is stop and ask ourselves, what is it we really need to be doing here? Things were kind of fabulous for us for some period of time. Lots of students willing to pay, we were raising tuition rates at above inflation every year. But when things like this happen where suddenly your endowment has taken a hit, your students are struggling to make the tuition payments, their families are concerned about how they're going to make those tuition payments, you have to ask yourself, how many rock climbing walls do we need? Like, are they really not going to come here if we don't have like fabulous lap pools and a spa? And so it's, at least at Holy Cross, and I'm sure at other, I talk to my friends at other institutions, the conversations that are happening are, what is it that we need to provide to our students? How is it that we can get our students in, get them what they need at a reasonable price? Because we can't continue on this trajectory. So I think it's been, for us as an industry, a time to stop and reflect and really try to focus on what's important and to use this as a way to streamline ourselves. So I'm sure Northeastern's having the same conversations. I know Harvard is, which is shocking to me, but it's obviously an important industry to the region if it's going to drive this innovation. And I think there will be some fallouts. Not every school is going to make it through this, but the schools that really provide value added, that do things other than what happens in an online kind of situation, will be okay.
Jerry, I wanted to move to you and the banking industry, obviously. The banking industry has changed and evolved tremendously.
Nothing going on there. Nothing going on.
It's amazing. The local and regional banking system, obviously, is so critical to, I stay on track, smaller business. And how has your business evolved to address those issues, especially as larger institutions here have evolved as well? Some have closed and changed.
Yeah, it's a relevant question. You look at our industry, and our industry in many respects is really merely a reflection of the economies around us. And so the ability for small business, mid-sized business to grow and achieve what we call value creation in their own businesses is the only way we're going to be successful. So we spend an inordinate amount of time in our commercial business today thinking about how we change the dynamics of how we engage with clients in the marketplace. We're moving the concept from where it was once a bank had a palette of products that it would provide to a corporate client or growing business to the concept of let's stop with that and have the conversation about where is this company trying to go, what is this company trying to achieve, and through a more consultative, thought-provoking process, let's help them achieve what they're trying to achieve. And so you build a more synergistic future for both the banking industry and the corporate clientele. And on the consumer side, radical change as well, because we think about where you use resources. And many of you probably attest to this in your own businesses that we're now dealing across 4 or 5 generations of people. And in our retail business, it's more about how do we offer the convenience to a consumer that they're looking for. And that means something very different to a 22-year-old freshly out of college and somebody who's sitting in my seat who likes to go in and talk with a teller. And so migrating from one platform to another across generations requires a huge transitory cost. And so I'm very hopeful for what's going to emerge because I think banks are really listening to their clientele at all levels and reacting appropriately. So I think you'll see a continued evolution of our industry. And in Massachusetts, by the way, it's a very attractive place to do business. You see a lot of banks entering this marketplace. That's because this is an attractive marketplace and banks see opportunity here.
Jerry, what is a teller?
Do you see the role of your...
Stop it. He's so progressive, this guy.
Do you see the role of your brick and mortar offices changing, though?
Well, not in the short run, but I do see that you have to look at resource allocation. And the question is, who wants to use brick and mortar? And so today, brick and mortar is really important to us because it sets roots for our company in all the jurisdictions where our clients are, and many of our clients want to walk in and use a branch. As you think forward 20, 30 years from now, that circumstance may change. It may not, but it may. And if it does, we need to make sure we're spending our resources where our consumer markets want them spent, so that we're providing the service they need. So we just have to, explore with our clients as we go forward.
Sure.
See what they want.
And you know, if you order offices closed, jerks like me will call you within minutes, and we'll have it on news, you know?
Yeah.
So what do you think it would be, I'll put you on the spot, the single most important policy the Commonwealth could endorse to improve the economy here in Massachusetts?
So I would expand it a little bit, Anthony. I would say the most important series of policies that Massachusetts could endorse would be almost where I began the conversation: a framework of simplicity, a framework of predictability, and continuing a pathway, which I think, as Barry points out, this state government has done well. They've balanced budgets and kept the profile, the fiscal profile of the state strong. That needs to continue as well. And the one cautionary thing I would just sort of note here is that long-term views and short-term views are the difference between capital and liquidity. They're very important things to keep our eye on, that we may have the right long-term view, but how we get there is equally important, because we can't disrupt the sense of optimism that I'm hearing around this room and hearing in other meetings. I think we need to keep that momentum going, because the baseline for me is we need to create economic development in simple, clear framework around the rules is critical if we want business owners to say, I feel confident about investing in my growth or investing in innovation to find that next product. Anything that takes marginal cost away from a business and moves it into government so that it covers a broader array is a lost opportunity to invest in either job growth or innovation.
Assuming that trillion-dollar coin has tails as well, turn it over, what's the worst mistake the Commonwealth could make?
The worst mistake that the Commonwealth could make, I get back to short-term, long-term, is not really guiding the Commonwealth forward with a sense of the trajectory of the pathway. There are different means to getting to the end state, which I think we are exactly on the right track. It is about investing in innovation, it's about education, it's about our infrastructure. It's about creating an environment with better communication and a lot more collaboration. And if we can do that, I think we stand a very good chance of having the state of Massachusetts do well in the future. What I worry about is how we get there and whether we make short-term decisions that take us off that course unintentionally.